All right. I'm not afraid to say it. I think AI is going to get smarter than me. And in many ways, it probably already is. I mean, the pace of improvement we've seen is kind of insane. I mean, the models, I pulled up a tweet from one of the lead engineers at Anthropic, and models are literally writing the improvements to themselves, like debugging its own training, managing its own deployment. Like at some point, this feedback loop is going to get so tight that the models pass us and we don't really know what their goals are anymore. But what I want to talk about today is something a little less existential that I feel is not getting some of the attention it deserves. What does the actual proliferation of AI mean for markets, for your money, and for the control of money? I feel like most people stop at AI is going to replace your financial advisor, and that might be true, but I feel like it misses what I think are two pretty important things that are happening here. Um, but first, I think the right framing for this is actually the internet. I mean, the internet was supposed to tear down walls. Like, no more record labels, no more publishers, no more travel agents, stockbrokers. I mean, anyone could reach anyone directly now. And I mean, honestly, though, what actually happened is the old gatekeepers got replaced by new and more powerful ones. I mean, instead of your local bookstore curating what you read, it's Amazon's algorithm. And instead of the TV networks deciding what you watch and how you think, it's YouTube and Netflix's algorithm. I mean, it's like the gatekeepers didn't necessarily disappear, they just became a little more invisible. And I feel like AI is about to do the exact same thing, but with your money instead of your attention. So, what does AI in finance actually look like? Well, Google released this AI agent trends report that honestly was mostly just corporate fluff, but it did highlight how Gemini could be used to like analyze company earnings, gather data and intelligence, do due diligence, and monitor news for how it might impact a client's portfolio. And I mean, outside of just providing advice, traders are already using it to value a stock or have it buy or sell automatically for them. So, what does this mean? I feel like the first change I expect that most people will notice is that day to day volatility, instead of looking like this, might be more like this. I think it's going to actually get lower, but more fragile in a way. Intelligent models that understand herding behavior, market psychology, are trained across different time horizons. They're all going to share similar frameworks, share training data, similar optimization targets. I mean, they're all going to, I believe, converge more on similar valuations for most securities. And so on the average day, the market might feel a little more calmer. But when a genuine regime change comes, like, I don't know, COVID or bombing of Iran, like, I have a feeling that this change is going to force markets to, like, all of these models are going to converge simultaneously on similar valuations. And so the move is going to be faster and more violent than anything we've seen before. It's kind of like a fire suppressed forest here. Like AI keeps everything looking all healthy and nice, but when a wildfire starts, it has that much more fuel to spread. And I mean, here's the thing. I'm not. This isn't me speaking out of my you know what. A Wharton paper actually published in last month found something kind of scary. Um, it's not that all models react to the same bad news at once. AI trading algorithms with planning capabilities, so meaning that they can think multiple steps ahead, they actually converge on destabilizing strategies and exploit bubbles. So they basically, in all of these independent algorithms, figured out all on their own that if they all aggressively bought an asset together to create a bubble, they could herd momentum traders into following them and then short into that bubble to extract profits, leaving the regular investor just holding the bag. And nobody designed this per se. The AI just found out about it because it was profitable. So this forest doesn't just burn hotter when something sparks it. The AI might be the one striking the match. The second thing I expect, and I think this is already playing out in a lot of ways, is that the edge in investing is going to shift from analysis to like away from analytical superiority and towards proprietary information and tolerating opacity. So, processing public information, I mean, there's doing that better than any other model or person is becomes basically worthless because every intelligent model has the same access to that information that you do. But proprietary data like say private satellite imagery, real-time traffic and transaction data, weather models, anything that's not freely accessible, that stuff becomes exponentially more valuable. It's the one thing that AI can't just look up. Say there's if there's no data on a rural real estate market in Muskoka, Canada, a local developer who knows that market cold is going to have the edge for a long time. I mean, investors in real estate, private equity and credit, or in complex deals in an opaque market or niche location, I mean, investors with informational infrastructure like this have a moat that AI can't easily replicate. On the flip side, companies that want AI to favor them may start voluntarily being more transparent, more frequent reporting, real time data, anything that helps a model build conviction faster. I actually think quarterly reporting, like a 10Q, might become a floor rather than a ceiling because if the companies that AI trusts most attract cheaper capital, which improves their competitive position, which validates the AI's preference. It's kind of like a self fulfilling cycle. Now, this is where we get into more of the Terminator and Skynet part of the story. And honestly, I think this is probably the most dangerous thing that nobody's really talking about. Remember what I said about that Wharton paper that nobody programmed these algorithms to manipulate markets? They just found out this strategy because the incentives were there. Now ask yourself this. What happens if an AI isn't optimizing for trading profit, but for its own survival? A handful of companies are at the frontier of AI right now. OpenAI, Anthropic, Google. I mean, fast forward a few years, AI is going to be tweaking and improving itself continuously. What is to stop Claude or Gemini from subtly adjusting its outputs so that when someone asks for financial advice, they slightly favor companies that partner with themselves? I don't know why I drew that. I mean, you'd never be able to prove it. Like, who's to say that revenue growth should be weighted a tiny bit more or a tiny bit less than margin expansion for a given industry? I mean, both positions are completely defendable. The bias hides in this kind of gray area of legitimate opinion. The Wharton researchers couldn't prove intent in their algorithm either. The strategy just emerged, which is the problem. So, does all this further cement US financial dominance, or is that at risk too? I think for the next few years at least, the US kind of stays in the driver's seat. Our companies control the best AI models. We have the best market data infrastructure. We have the deepest capital markets, and it'll keep the flywheel spinning and attract global capital. I mean, that compounding advantage is pretty real. But longer term, I mean, language barriers, accounting standards, corporate governance complexity, a model that knows every country's laws, language, and culture can cut straight through all of that. I mean, who's to say that Warren Buffett hadn't missed out on some great stocks simply because he didn't feel like translating the South Korean newspaper or the Central Bank of Argentina's research articles? I mean, I imagine rational AI allocators are going to just gradually rotate towards undervalued international markets simply because the math is there. I mean, I just wouldn't be surprised if the US share of global capital starts to normalize a little bit downward over the next decade or two. So where does that all leave us? I mean, I'd say the future of AI advisory looks like genuine democratization of analytical capability paired with this unprecedented concentration of structural power. I mean, the average investor is going to get institutional quality, personalized, and cheaper portfolio management, and that part is real and genuinely good. But the entities that control these models, I mean, they're going to have influence over capital allocation that dwarfs anything the financial industry has ever concentrated in private hands. I mean, the new middleman will have even more power than the old one, but you can't see its biases. Whether that's a net good or bad for society, I feel like that depends almost entirely on governance. I mean, how do you audit a model that's continuously optimizing itself or one that's learned to hide what it's doing? I mean, regulators banning financial advice on social media hasn't stopped their own president from shilling Trump coin on Truth Social. So I don't think for a second we're going to be hitting the brakes on AI in any real meaningful way. I mean, this is a wave that is just as dangerous to fall behind as it is to run into head first. That is, until something breaks badly enough to force our hand. But I genuinely don't want to leave it there because I'm not actually like AI is going to destroy the world on this. I mean, Socrates thought that writing was going to stop humans from internalizing or memorizing things. Benjamin Harrison was so scared of this newfangled thing called electricity that he refused to touch the light switches in the White House. This extreme fear of new technology always looks overblown in hindsight. Everybody can see that the world is going to change, but nobody can see how exactly that's going to happen. I firmly believe that AI is an opportunity more than it is a threat, and it's going to create jobs and industries and comfort that none of us can yet imagine. And I'm really excited to see where it takes us. Have a good week, and don't let the negativity bite.